Good morning. It's Wednesday, June 10th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I survived the surgery last night. They repaired the trigger finger. We're ready to rock and roll here. Click that buy and click that sell button. So the United States and China overnight had established a framework to implement the Geneva Consensus, which aims to revive the flow of sensitive goods. This announcement follows 2 days of kind of high stakes talks, trade talks over in London. There was not a lot of news flow out there, and that's why the U.S. equity markets were relatively muted with very little volatility. Now, this framework, which still requires approval from Donald Trump and Xi Jinping, so any kind of rejection of that could send these markets wildly in one direction or the other. It does include China's commitment to expedite in shipments of rare earth metals to the United States and the United States' intention to ease some of the export controls. However, several issues here, including China's trade surplus with the United States, still remain unresolved. I believe that that's going to be the next topic of discussion, and without anything thrown in there about that, that's where the possibility for different phases of this trade negotiations take place. So we look at the S&P 500 down about 10 3/4 at 60.34 1/4. Relatively tight range here, 60.52 being the high, 60.21 being the low. The first level of support is going to be the 6,000 mark, and below that's going to be about 59.84. Any kind of basis where we sell off below 59.84 and we hold below it really opens the door for a deeper correction. However, the trader's mentality recently has been buy the dip, so I'd expect some level of support here to come in here and not really that deep dive below that gap on the charts that we've seen and talked about over the past few weeks here, down at that 57.50 level. You do have the NASDAQ down about 32. The FANGs are slightly lower. The Dow's down 100, and the Russell 2000 is edging slightly higher. We identified on this video here the inverse head and shoulders pattern on that Russell 2000 and the breakout to the upside. Many traders had established positions in there and still continue to maintain those positions. So if you look at traders and what they're largely unfazed by this ongoing U.S.-China trade talks, and it really is resulting in this kind of muted flow here in the equities. There's heightened nervousness, though, ahead of the upcoming inflation data, as any kind of high reading could pose a significant risk for the market that's already trading near the record highs. So the CPI is the key focus here today. So economists anticipate a relatively mild figure. They're projecting a 0.3% increase in the core inflation for May. So you look at analysts like JP Morgan, their current positioning indicates that a hotter inflation report would likely lead to a severe correction. So that's where we can get that breakdown below that 59.84, while a more dovish report doesn't really offer substantial rewards. It's indicating that we'll most likely continue to drift higher to the upside here. So the potential for an upside movement of any significant value here is really going to be limited, in my opinion, here at this point in time, without a further catalyst behind it. So you look at the market positioning, and this is where the Russell 2000 really started to break out to the upside here. The equity benchmarks, they've shown little movement in recent sessions here. However, the surge in heavily shorted U.S. stocks continues to thrive. A basket of these stocks, they have the Goldman Sachs most short basket here, rose by about 9% in the last 5 trading days, leading up to Tuesday, and has had about a 16% increase since the end of May. Now you look at gold futures here, up about $9.40. That's slightly higher, pushing up here, 33.69 being about the high, 33.35 being about the low. Now there's a downward trend line here where we've had a series of lower highs. We've broken out over that bullish flag pattern here, but no real follow through to the upside. What gold's doing is it's tracking on the bullish side of the bull flag, meaning if you connect a downward sloping line here where it gets the breakout, it's coming back and testing that level right around that, 33.35. So that's going to be your critical level of support here on those markets. And I'm looking at a few different levels here for possibility for entry with some kind of clients. Not a recommendation out to the public because of the fact that we don't know your risk tolerance, your current financial situation, and you haven't been approved for a futures trading account. If you'd like a futures trading account, send an email to info@BlueLineFutures or call the trade desk in the number below. But some levels here that I'm watching is the 33.15, Below that would be 32.85 and 32.55 as some possibility for some areas of interest in the markets here. So the easing tensions between the world's two economies might not be great news here for the safe haven asset here, especially if you get these bills signed off here. Might see some volatility in that market here, but it seems like investors are kind of holding off right now on any kind of big movement in the gold market and kind of waiting to see what unfolds. They're also keeping an eye on the upcoming U.S. Treasury auction on Thursday, where if you see demand weak, it could actually make gold more appealing and people would jump back into that market. If it seems to see that the demand for U.S. Treasuries becomes hotter, it's going to show a rotation out of assets like gold, which offers no yield, and into some other plays here like the Treasury markets. Now you look at the industrial metals, copper futures really under some pressure here, and I think it's some of the easing tensions between U.S. and Mexico with steel tariffs and steel imports and things like that. Also discussion about rare earths with magnets, because the magnets here are a critical component here for the automotive industry. You get that trade flow going back and forth. It seems like some of the tensions around some of these industrial metals are starting to come down a bit. So you got copper futures down at about breaking below 480, and there is a bit of a bear flag setting up in that copper market where it's drifting higher and it keeps running into resistance where it could open the door for a larger correction. Now you got silver futures down about 24 cents at 36.38 on the July contract. My focus will shift over to the September contract because of the fact I'd like to have more time. Same thing with the copper market. Focus will shift over to September copper as well. Now looking at the silver market, when you get these types of breakouts and you have a double top of resistance and the market finally breaks out above it, and it takes off like a rocket, in my opinion, it's not been advisable to chase. That's when you tend to let some of your positions go. Where you start to look at the possibility for a re-entry is always going to be the return to the scene of the crime, which is where the market broke out initially. So it is where we saw the market reach a double top, break out to the upside. Now it retests that. So if you get the chart pack, I'll outline and I could show you where, you know, platinum futures or palladium futures, or copper futures, where they tend to hit these levels. And what I'll do is I'll drop an arrow over those levels where the market had reached and ran into either critical support or resistance. And then remember that old support will become new resistance, old resistance will become new support. So that's something we're watching in, say, the crude oil market, where crude oil futures had bounced off that 63 to 65 for so long, then finally break through that level, go down to 55, and now they're returning back up to that level here where markets are bouncing back and forth. So looking at that on the silver market, it's closer to the $35 mark where we would look at it and possibility and see how the market is going to trade around those levels here. So looking at the ETF flows, the exchange traded funds, they added about 99,000 troy ounces of gold holdings in the previous session here. That was the third straight day of growth. The ETFs also added about 1,050,000 troy ounces of silver holdings in the previous session, and that's the fifth straight day of growth and the longest winning streak since April 18th. Now, platinum holdings increased by about 10,000 troy ounces for the fifth straight trading day, and spot platinum rose to the seventh time in 8 days to the highest level since May 2021. That's really a short squeeze going on in that market here. I'm seeing a lot of people try and come in and short the platinum market. Now, being an experienced trader in platinum futures are very thinly traded. If you look at the bids and offers, they're oftentimes wide. There's not really a lot of depth in that market as far as the book and things like that, as far as order flow. So someone comes in with like a 10, 20 lot or 50 lot in the platinum market, sells it at the market, you're going to see some wide fluctuations and gyrations come into that market. So looking at platinum up 3% here at 1251, again, hitting a lot of stops on the upside. Could platinum go up to 2,000? Well, it takes a lot of demand here from not only the jewelry aspect, it takes that limited supply coming out of the ground, it takes that demand on the automotive side to pick up a bit, and you could realistically see some kind of larger catalyst, larger move like that. Not a recommendation. I'm not saying that platinum's going to 2,000. I've seen platinum at 2,000 here. Platinum used to be at 2,000 and gold used to be at 1,000, and we used to monitor that spread and trade that spread all the time. So looking at the gold silver ratio with a small uptick at about 92 to 1 here, dipped down to about 90 to 1 yesterday, at one point when we saw some resiliency in the silver market, some volatility in the gold market, but we're going to want to continue to monitor platinum inflows, silver inflows, and again, those gold inflows. The outside markets here, we do have crude oil futures after having that explosive rally yesterday, but resulting in a liquidation towards the end of the day, which oftentimes is a false breakout, is now starting to signal a resurgence back to the upside because of the fact that President Trump told the New York Post that he's getting less confident about whether or not he can convince Iran to agree to shut down its nuclear program. He said that it would be a mistake if Iran doesn't make a deal, and they take this as more of a threat, more of a hostile, aggressive approach towards Iran. Looking at some of the outside markets, we do have the agricultural markets all pushing up a bit higher. There is a USDA report that's going to come out later in the week. You do have wheat futures up 1, corn up 3, soybeans up about 2. Not a real big movement here on the soybean market given what was taking place here between US and China. The dollar index slightly lower, Australian dollar slightly lower, euro currency slightly higher. So more of a mixed bag here for many of the foreign currencies. You have 10-year yields pushing back up to about the 4.5%. You also have 2-year yields up at 3.92, so want to continue to monitor that. On a soft side, you do have sugar down at 60.40, so that's a big washout in that particular contract. A lot of interest in there. And then Bitcoin futures hovering right around that 110 mark, hitting some new all-time highs here before backing off a bit. I think Bitcoin's more a bit range bound here, with many of you picking up Bitcoin closer to that 100,000 mark from 105, pushing on down and letting some of those contracts go as the market continues to go up. That trades in a flag right now, right around the all-time highs. So it's going to have various degrees of interest here, and also a lot of head flows about Bitcoin reserves, how much Bitcoin's left, and other alternative cryptos here catching some kind of steam to the upside here. No approval yet on the Ripple futures here. Still doesn't have enough, and many of the FCMs as we deal with out there are not actively trading here in that Ripple futures contract because of the fact, if you look at the open interest and the amount of trading that's going on, it looks like it's only really a handful of participants. So the open interest on the micro Ripple, 876 for the June contract, and the volume was only about 450 contracts. So not exactly the most liquid contract here at the moment. But you guys got any questions? You want to open up futures trading account, shoot an email to info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.